Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SUMMIT Therapeutics Inc. quarterly report. SUMMIT Therapeutics Inc. offers a range of businesses and services including discovery and development of medicinal therapies, commercialization of patient-friendly treatments, immunotherapy through blockade of PD-1 with antiangiogenesis, treatment of non-small lung cancer, phase III clinical trials, development of bispecific antibodies for immunotherapy. The stock price of SUMMIT Therapeutics Inc. has experienced no significant changes in the past year, despite reaching an all-time high of $36.91 in April 2025. This lack of movement is likely due to several factors, including news that was already anticipated and priced into the stock, minor events considered insignificant by investors, or offsetting market dynamics. While several significant events have influenced the company's stock price over the last year, such as the expansion of its phase III clinical development program and missed earnings estimates, there is no specific news identified that caused a minimal fluctuation in the stock price. The absence of significant changes suggests that the news was either anticipated or had a negligible impact on investor sentiment. The primary drivers of revenue growth or decline in the company's financial performance are largely influenced by several key factors. Oncology clinical trial costs have a significant impact, with expenses totaling $75.2 million for the 3 months ended September 2025 and $179.4 million for the 9 months ended September 2025. Milestone payments tied to regulatory approval of ivosymab also play a crucial role, as do milestone payments tied to annual revenue from this product. Additionally, royalty payments equal to a low double-digit percentage of annual revenues from ivosymab contribute to fluctuations in revenue. Commercial and regulatory milestones worth up to $3.51 billion and $1.05 billion, respectively, also have a significant impact on the company's financial performance. Furthermore, sales of ivosymab and other approved products drive revenue growth or decline. The company's ability to generate positive operating cash flow is inconsistent and varies across different periods. While there are instances where the company generates positive operating cash flow, pages 11 and 20, it also experiences negative operating cash flows in several other periods, pages 12, 25, 39, and 44. This inconsistency suggests that the company's financial performance is not stable, making it challenging to determine a clear trend. Debt and interest expenses. A significant change. The company's debt level has undergone a significant change. Initially, it was reported as $0 on both September 30, 2025 and December 31, 2024. However, further investigation revealed that the actual debt levels were $64,928 and $41,729 respectively. This discrepancy highlights a notable increase in debt. The interest expenses have also seen a significant change. In 2025, the company reported zero interest expense, whereas in 2024, it incurred a loss of -$2,454 and -$8,677. The shift from a loss to no expense indicates a substantial reduction in interest expenses. Management's outlook on company strategy. The company plans to focus on developing new product candidates through research and development. Notably, its lead candidate, ivosymab, has shown promising results in phase III clinical trials, demonstrating a statistically significant improvement in progression-free survival (PFS) and overall survival (OS). To further support this, the company intends to expand its clinical development program with additional phase III studies. Management expects to submit a biologics license application (BLA) for ivosymab plus chemotherapy by Q4 2025. However, this growth comes at a cost, as oncology-related research and development expenses are expected to increase. As a result, the company will continue to generate operating losses in the foreseeable future and may need to raise additional capital to fund its operations. Management acknowledges the potential risks associated with raising capital, including dilution of existing shareholders' ownership interest and unfavorable terms. Despite these challenges, the company remains committed to advancing its product candidates and improving patient outcomes. The company's financial summary reveals that it has taken a conservative approach to shareholder returns by neither paying dividends nor buying back shares. This decision suggests a focus on retaining earnings for future growth and investment opportunities, rather than distributing profits to shareholders in the form of cash payments or share repurchases. That concludes the financial summary for Summit Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.